Emily, well, all eyes are on the Aussie dollar right now as the Reserve Bank of Australia holds its policy meeting later today. The RBA has kept rates steady at 3.5% since July, so can we expect any cuts from the central bank today? Stephen Nash is the head of strategy and market development at FIIG Securities, and he is joining us here to talk RBI. What are you expecting today, Stephen?
Look, at this stage, we're expecting no change from the RBA. What the RBA is looking at is growth in terms of the domestic economy being around trend. There have been some recent comments about the impact of declining resources on the economy, but at this stage it looks as though the RBA in the medium term is looking for the non-resource sector to take up the slack in terms of a decline in the resources sector. So no changes at this stage.
Interesting, because it's always been called a two-speed economy with resources doing the best, and then you've got the mining minister saying that the mining boom is over. And when you look at the PMI data out of China, the RBA certainly must take that into consideration. Of all the central banks in the world who watch China closely, it has to be you guys down there.
Definitely. The Chinese economy is incredibly important for the RBA. Regional growth has been a concern for the RBA over a long period of time now. So moderation in Chinese growth is a positive for the RBA. It takes the pressure off in terms of inflation for the RBA. And the RBA described this as more a sustainable level of growth, not a collapse in growth. So that's the way they're seeing it right now.
Stephen, do you think there'll be any explicit reference to the Aussie dollar levels in any statement that the RBA may give today, or in the future for that matter?
Look, given the decline in commodities we've seen of late, normally the Australian dollar would be gapping down and you'd see a lot of volatility. I think what you're seeing of late is quite interesting in the sense I think there's a lot more liquidity in the Australian dollar than there has been for a long time, mainly because of the attractive yields the Australian dollar offers. So I think that given that the resource sector is a little bit weaker, we expect those declines to continue, but I think this newfound liquidity in the Australian dollar is a real positive. I don't expect any major announcements by the RBA with regard to them targeting the currency at this stage. What they typically do is intervene in the currency when it becomes illiquid, and that's really not a problem right now.
But closer to parity, is that probably a fair value for the Aussie dollar, Stephen?
It's always difficult to say what fair value on any currency is, but look, I think given the concerns in the resource sector at the moment, a lower level of the Australian dollar is probably appropriate. We seem to be trading towards that. I would say that at this stage would be a more appropriate level for the Australian currency. If we were to fall further than that, I imagine that people seeking yield will acquire the Australian dollar and cushion any of the fall. So what's going to happen, I think, is that people react to the commodity story, selling the Aussie dollar, but the yield players are still in there buying the currency.
Okay, Stephen, where do you see the Aussie sitting at by the end of the year?
Look, at this stage, I imagine that once concerns about commodities are moderated and the relative value of the currency is exposed again, that we'll see the currency probably back up towards the 105 level towards the end of the year. That really depends on domestic growth. Given the decline in resources and the falling tax revenue the government will face, there may be some tightening of fiscal policy, and that may affect growth towards the end of the year, but that's yet to be seen.
Stephen, so many question marks out there this week when it comes to the Fed, the ECB, what's happening with the RBA and China as well. What's your number one piece of advice for investors?
Look, I think at this stage, Europe's been quite well controlled in terms of peripheral yields. Going forward, I think the ECB is going to have an ongoing difficulty with controlling those longer-term peripheral yields. And I think as we approach the end of the week, we'll get more discussion from the ECB. But I think that's the main focus right now, what happens with regard to Europe. We've seen differential borrowing levels for Spanish small to medium-sized businesses compared to German, and that highlights what Draghi's been saying about monetary policy not being uniform within Europe. So hopefully they've got a good package together, and we'll see some of that towards the end of the week.
All right, thank you so much. Stephen Nash there from FIIG Securities joining us.